Hello and welcome to another live technical analysis session. So we're going to be starting off with the euro against the US dollar. First of all, we need to speak about the Eurozone's preliminary GDP rate for Q2, which was released moments ago. It's essentially it came in higher than expected at 0.3%. Now, that might be attributing, and we could be attributing that to the recent strength in the euro in the past 15 minutes. You can see this bullish candle moving higher. But using the higher time frame analysis, we're moving on to a 4 hour chart. We had a downwards moving trend line that was invalidated right around here. But we saw heavy selling pressure, which caused the Euro USD to move lower down towards RS1 level of 1.08150. Now, it has bounced off our support level, so we're validating it as an actual support level. We're going to be removing this downwards moving trend line. We could be drawing a second from the same point at this peak and then simply reflecting it higher. The issue with the breaking of our downwards moving trend line could also mean that the bearish momentum may also be fading away. So essentially, the more trend lines you draw, so it's approximately 2 to 3 trend lines that are broken, it implies that it might be switching and moving in the opposite direction. So if we take Euro USD, you can see that it's bounced off and would now actually maintain a slight bullish outlook at least for the rest of the day. From a more macro perspective, you can see that the Bollinger Bands are actually narrowing. Well, excuse me, flattening out, not narrowing, which could also imply a relatively sideways movement. Now we've seen the 50 moving average crossing below the 100 moving average, which is essentially a death cross being formed, and also implies a bearish outlook for the particular pair. So if we're taking this from a more macro perspective, we would be bearish from a technical point of view. However, we have the Fed's interest rate decision later on this week, upon which they are expected to remain on hold. As such, it depends on the bank's accompanying statement. If it is predominantly dovish in nature, then we might see the euro gaining against the US dollar as the greenback may weaken. And that goes the same for the British pound, so cable, and the JPY gaining against the US dollar. We should also note that we also have the employment data for the US on Friday. So JOLTS is today, preliminary HICP rates for the Eurozone and France are tomorrow. We have the prelim HICP rates for Germany today. So we have a high number of financial releases which are set to release during the week. So from a technical point of view, yes, the technicals may be slightly bearish currently, but that picture could easily change based on the financial releases. So let's take the JOLTS job openings figures for July as an example. If it comes in higher than expected, implying a resilient US labor market, as is the case, so the expected figure is higher than the previous figure, which tends to imply a resilient labor market, could provide support for the US dollar. But if you take the ADP figure, which is expected to showcase a loosening labor market, then that could be reversed. The issue is that the Fed's interest rate decision is before the US employment data. So essentially, a Fed reaction or perhaps Fed Chair Powell's press conference after that decision may be slightly dictated from the JOLTS and ADP figure as well, but that could change on Friday. So whatever we're saying in terms of a bullish or a bearish outlook would be very short term, which is why we're using a 4 hour, which does imply for the next few days or so. But it might be more prudent to see perhaps a 30-minute chart or a 15-minute chart if you're day trading, 1 hour chart if you're day trading as well. But still, that's a bit more of a higher time frame. Overall, if we look at the 1 hour, 30-minute, and 15-minute, we would maintain a bullish outlook. RSI is close to 70. This appears to be a break below, finding support and moving higher. Would not be surprised to see the pair move up towards our downwards moving trend line, so the second one that we've drawn, before continuing on its ascent. However, if it does reach up to our one and breaks essentially above our downwards moving trend line, we would switch for a sideways bias between S1 and R1. So it depends on today's price action. At least for today, the bias is slightly bullish, but from a more macro perspective, could be bearish. Downwards moving trend line. RSI is still below 50. It's at 43, which does imply a bearish market sentiment. But as you can see, it's moving slightly higher. So that 40 could become 50 by the end of the day. And then we would maintain a sideways bias during tomorrow's trading session. Nonetheless, we've noted some key financial releases, and for the pair for today, I would be slightly bullish, but macro bearish. So that's it for the euro against the US dollar. USD JPY. Now we noted this point, you can see with this red circle here, bouncing off 151.90. So an actual support level. It has reached up to our R1 level of 154.75. Note this is a daily chart, not a 4 hour, not a 1 hour, 30 minute, or 15 minute. On the 4 hour, it's much more clearer. It is finding resistance at our R1 level. If it manages to break above R1, we would switch for a bullish outlook. Note the dollar was strengthening. So we would look at the daily chart for the Euro USD. So yesterday was strengthening on Monday, and I'm assuming that is the same case against the JPY. It is not, which is interesting. Now it appears to be a bit of a discrepancy. One could say that following the intervention from the government of Japan, it is simply retracing. So this price action could be people simply exiting their short positions, taking their profits, which may allow the pair to move in an upwards direction. If we look at the daily, strengthening yesterday. Yes, that is actually correct. My mistake. So we've seen the dollar strengthen against the euro and the JPY yesterday and today. Is it the same case for the British pound? It is not. Cable actually strengthened yesterday, which is a bit surprising. But overall, slightly bearish. We'll move into cable's technicals as soon as we've finished with the USD JPY. So back to the USD JPY. Daily chart, RSI is well below, well, not well below, it's at 36. It's a bearish market sentiment. We might see a retracement back up to R2, perhaps, looking at the most recent price action. But still, for its temporary bullish outlook, we would require a clear break above R1. That does not constitute as a clear break. This is simply a wick. A clear break is a candle that has opened and closed above R1. Then that would lead me to believe that it might move in a slightly upwards fashion for a day or two. Now, the downwards moving trend line we had placed on the daily chart was relatively steep. As such, it could be easily violated, as you can see from this daily candle. Now, for today, slightly bullish, but as I've said before, from a more macro perspective, maintaining our bearish outlook. So it might break above R1. We would like to see a retest of resistance at 157.70, but not a break above. The reasoning behind this is high, high, lower low, lower high, lower low, and we'd like to see another lower high being formed below our R2 resistance level. If we see that, so essentially a candle in the middle that is higher than the left and right shoulder, as is the case here, I'll just zoom in. So this was a lower high. We see something like this being formed around here would maintain our bearish outlook because we're forming new lower highs and lower lows, as you can see from this red circle here. So macro, we're maintaining a bearish outlook, but for the day, it might move in an upwards fashion. Moving on to cable, GBP USD. So the BOJ and BOE also have interest rate decisions this week alongside the Fed. So on Wednesday, we have the BOJ and the Fed, and then on Thursday, we have the BOE. For the Fed, they're expected to remain on hold, and as such, as I said before when analyzing the euro, we're looking towards Fed Chair Powell's press conference and the bank's accompanying statement. There appears to be a sort of sentiment that is emerging in terms of worries of a potential recession if the Fed does not cut rates now. So if that is indeed true, I would not be surprised to see the Fed's accompanying statement be relatively dovish in nature, which could weigh on the US dollar. But that is mere speculation at this point in time. For cable, we have the BOE's decision on Thursday. So let's say the Fed is hawkish on Wednesday, for example, and cable moves lower, but then the BOE is hawkish on Thursday, we might see them recouping some of those losses, and vice versa. If the Fed is dovish and then the BOE is dovish as well, so the pound could gain against the US dollar and then could lose some of those gains on Thursday. But if the BOE is hawkish and the Fed is dovish, we could see cable moving perhaps even up to R3. But of course, that is mere speculation. It depends on what the interest rate decision says in terms of the bank's accompanying statement. So we'll have to take a look after those are released. For the JPY, we're expecting the BOJ to hike by 10 basis points. If they do not, it could weigh on the JPY, and we could actually see USD JPY moving back up to R3. If the bank's accompanying statement is not hawkish in nature, that could further weigh on the JPY. So for the JPY to gain against the US dollar for the rest of the week, in my opinion, they need to hike and they need to be aggressively hawkish, so implying further and more rate hikes to occur for the rest of the year. Perhaps even more than a 10 basis point hike, perhaps zero point 0.2 or zero point 0.3. That could provide support for the JPY. So we need them to be very hawkish for the JPY to actually gain against the US dollar, and that is my opinion. Moving on to the Loonie, so USD CAD, it has moved up to our R1 resistance level at 1.3845. With this most recent movement, it is prudent for us to move our S1 support level to a higher point, and that would be at 1.3765. That is my new S1. I'm liking how this upwards moving trend line has been validated. It has not been broken. Applies a bullish market sentiment for the particular pair. Note the RSI is at 70. Bullish outlook for the pair. Although I would not be surprised to see it retrace lower, which is why I'm actually going to be bringing my S1 slightly lower. So this daily candle could be the formation of a new higher high, and it might retrace to lower ground to gain some support before moving higher. So this is my new S1. I will be editing the text labels as well. Some of you might be asking, well, why don't I keep it here? I think there is more support at this level rather than here. This might be a bit too close to the current price action, so we're giving it some room essentially to breathe. So this becomes S1. That is 1.3765. S2s are old S1, and then S2s are old S3s are old S2. So this becomes S2, and then that becomes S3. And we can keep our resistance levels essentially the same, so remaining intact. Look at the price action on the daily chart. It is respecting the R1 resistance level. If it closes in the reds, would not be surprised to see a retracement back down to S1 before continuing on its ascent. AUD USD. On another note as well, for the Canadian dollar, it might be influenced by the decline in oil prices. Look at the daily chart. Oil is moving lower and lower, having broken below our S1 level of 75.5. Could also weigh on the loonie, given that Canada is an oil exporting nation. So lower oil prices may also imply lower demand for the Canadian dollar. Such could further support the US dollar on its ascent against the Canadian dollar on a daily time frame. Aussie staying between S1 and R1, so we're keeping these support and resistance levels. Downward swing trend line is about to be violated, but the RSI is at 30, so it does imply a bearish market sentiment. So we're seeing the dollar overall gain against the euro, the JPY, cable, CAD, and the Aussie. So we're seeing a general strengthening of the greenback. So maintaining a bearish outlook for the Aussie, since we're maintaining a bearish outlook for the euro, for the Japanese yen, and for the British pound, it would not be surprising for us to maintain also bearish outlook for the Aussie. The dollar appears to be strengthening against its counterparts. It does make some sense. So bearish outlook, but we needed to break below our S1 level for our bearish outlook to be maintained. Yes, there are approximately 100 pips difference between our S1 and R1 level, but I would not be surprised to see it move lower. So this is our support level that we have for the AUD against the US dollar. Moving on to the S&P 500. Now we've been banging the drum about the S&P, the Nasdaq, and the Dow Jones 30 for the past week or so. We've been milking this story that we're very concerned, and we are still concerned. High, new all-time high, lower high. This is a daily time frame. If this candle ends in the reds and lower than the middle bearish candle, as we said before, this could be a new lower high, lower low, lower high. Such we would maintain a bearish outlook for the S&P 500 depending on how it ends. So a bit of a concern for the Dow Jones 30. For the S&P 500, we're seeing it move lower, retracing slightly higher. It has broken above our R1 resistance level and has actually validated and continues to validate our upwards moving trend line. So one could say this is a retracement and the index may move higher. I am a bit concerned with the RSI at 45. By the end of the day, if it goes back up to R2, that would be 50, so we could maintain a relatively sideways bias. The Bollinger Bands do appear to be flattening it out and might retrace to the mid-range before continuing on its descent. So it has broken R1, but I'm not bullish yet. For me to be bullish, I needed to break above R2, and I'm using that based on the recent price action. There wasn't a clear break above immediately. You're seeing some resistance, is now finding some support. So I'm a bit on the edge on whether I'm bullish for the index. I'm very concerned, and it will depend once again on the Fed's interest rate decision. We should also take a look at the Nasdaq, which we have here. Weekly for the Nasdaq, we're bearish. It's broken below our S1 support level, taking aim for 18,596. That is our S2 support base, our size at 38. Bearish outlook for the particular index. What else can we look? We can look at oil prices. So oil has broken below S1, which is now R1. Next support level is at 72.40, lower than that 67.90. We will be readjusting oil's support and resistance levels in tomorrow's technical analysis session. We can still use our S2 and S3 level, and if it does reach or moves towards S2, I'll place an even lower support level that we can use as a reference point for the next week or so. But overall, maintaining a bearish outlook for oil prices. Moving on to the precious metal. Bollinger Band still towards the downside. The RSI is at 50. It's broken above the mid-range of the Bollinger Bands, has found support. Wouldn't be exactly bearish for the precious metal. Now, I'll show you what I'm looking at in particular. This area here. Let's see, that doesn't look that good. Okay. This particular rectangle that I have drawn, that you can see on your screens currently, this for me would be a sell zone. Essentially, you can see by the 4 wicks that occurred. So take the most recent price action: bullish, and bearish candles. Heavy selling pressure. Now, we need a lower high. The downwards moving trend line has currently been broken. It has broken above our R1 resistance level of 2,384. Now, some of you may be wondering, but yes, it hasn't cleared this area yet, and you would be correct. The issue is if it does break above 2,395, I would switch for a bullish outlook. The reasoning is if it does break above, it could clear this high and would invalidate this as a new lower high. So it depends on this 4 hour candle. If this 4 hour candle forms, let's say, a doji and moves lower, so enters in a bearish territory and clears this temporary support area, we would maintain a bearish outlook. The question and the issue that one might have is that there appears to be a formation of an upwards moving trend line. So if this continues to be validated, we could maintain a bullish outlook. The second concern is the RSI, which is at 50. Now, despite the 50 moving average closing below the 100 moving average, implying once again a bearish outlook for the precious metal, it appears to be a bit of a concern currently. This is a 4 hour time frame. If we move on to the daily, it does appear to be moving lower. RSI is at 51, relatively sideways, but we are looking at a 4 hour. So essentially, it must not clear this area for today, and then we would maintain our bearish outlook, as this could be simply a retracement. But the price action is not that clear that this was a lower high. So a bit concerned. And for a bearish outlook to be continued and maintained, it needs to clear this upwards moving trend line. So invalidating it and then taking aim potentially for S1 at 2,350. So that's it for the precious metal. For Intel looked very nice, having broken above and cleared 32.8 and then $34 per share, but now appears to be moving much lower. That is a bit of a concern. It is reaching our last support level at 30.01. If we look at Microsoft, it is moving in a relatively downwards fashion as well. Nvidia, 4 hour time frame. This was a stock split. Bearish outlook for Nvidia. ExxonMobil managed to clear R1, failed to break above R2, is now below our old R1 level. Slightly bullish, but it must not break below S1. And then, so we've done the Nasdaq, Tesla. I want to look at McDonald's. So that they had a very well, not a very bad earnings report for Q2 yesterday, but what I've been reading is that it's not good. So I would like to have a look at the company's stock price. So essentially, we're going to be looking at their chart. So right click, show all, and then we can see everything that we are offering. So we have Philip Morris, Opera, UBS, General Electric, Home Depot, JD, JP Morgan, McDonald's, MCD. That is the ticker. And then we're going to be adding our template that we are using. Right. So 4 hour, but before we move on to a 4 hour, let's move for a higher time frame analysis. So this is a clear chart. We don't have any support and resistance levels. So let's look at this together. I'm seeing a break of a prior high at 260, formation of a higher low, broke above the previous high. Let's look at the weekly chart. Very nice, accumulating. Weekly, it's bearish. Let's look at the daily chart, 4 hour. Okay. So we've seen the chart, but we need to add in the fundamentals. The news that came out from McDonald's yesterday were bad, which means it could weigh on the company stock price. So keeping that in mind, despite this, it could move lower. So we'd maintain a bearish outlook for the company's stock price purely based on the reports of their earnings for Q2 that were released yesterday. We need to put our support and resistance levels. So let's start off with resistance. Now we're looking at the chart. This would be a very nice level for resistance. You can see the accumulation of buy orders. It failed to break below moved higher, but then managed to pierce through, taking everybody out and went along here. Managed to come back up, however, broke below and has not been validated as a resistance level just yet. I'm going to see where this wick touches. It is on the opening of this bullish candle that saw a significant surge in buying pressure for the company's stock price. So, keeping that in mind, I will be placing this as our R1 resistance level. I will be adding the text labels to make it easier for you guys at home to follow along and perhaps potentially placing these support and resistance over yourselves and then simply seeing how it validates it or pierces through and whether or not we were correct or wrong. So for my next resistance level, $10, $13 approximately. This high here, validated by this wick, broke below, failed, managed, moved higher, came back down, tested, found support, broke below, moved lower, came back up, tried to break above, did not manage to do so, moved lower, came back up for another attempt, actually a second attempt, did not manage, moved below. 277 is my R2 level. So I'm just walking you through my thought process. Anything in between, a bit too sketchy, but this is a nice resistance level. I'm seeing it. I can see that there was support and then there was resistance. Heavy buying and selling pressure appears to have taken place around this level. So that is a valid R2 level for me. Now we do need R3. So we've left $13. So we're looking something around the $290 per share. But this is a bit nicer. The same thought process as before. Support, pierce through, bulls took over. We would have ignored this level around here. We've placed it somewhere around here. But look, 1, 2, 3, and a fourth, broke below, found resistance. We're seeing heavy buying and selling pressure here as well. $288 per share for McDonald's. That is wood, and that is my R3 resistance level. So I've placed my resistance levels. Now we need to turn towards support. Having seen how the company stock price moves within a day, something here would be too close. So we're going for the safe option. The safe option for me would be 243.40. That would be my S1. That's my S1. And I need to find S2 and S3. And since we don't have anything near our S1, we need to go back. Historical data, about $13 approximately to maintain it. This is nice. And I'll show you exactly why. Look at this reversal formation having occurred. Very nice. Swing low, prior high. Once again, lower high. Lower low. And let's just draw in that shape. So that's one, that's two. And then what validates that for me as a resistance level, as a support level, is this here. So we can see, looking at the first red circle, this was a low, failed to move lower, reversal formation, failed to break this prior low, so higher low, came back down, found support at where we estimated that there was heavy buying pressure and moved higher. So 230 for me would be a valid support level. And then let's see. And then we can take, which is also $13. So it appears that we are maintaining a relatively equidistant between our support levels. But overall, we are seeing support 1, 2, and 3. And we said at the opening of this bullish candle, 263 or 264. We round that up. So we have our support and resistance levels. It's 1, 2, 3, 243.40. That is S1. 230.60 for S2. Now, this is probably the last chart we're going to be doing for today. Tomorrow, we'll be discussing the impact of the financial releases. We will be taking a closer look at the USD against the JPY. What I did not mention for gold is that geopolitical tensions in the Middle East continue to be a concern. And I'm noting the recent statements from Turkey in regards to Israel, which is a bit of a concern in terms of potential escalation in the region. And then also taking into account the recent strikes from Hezbollah against Israel and then Israel retaliating over the weekend. That is a concern about a full blown war between the two, which could push oil prices and gold higher, safe haven inflows, and then concerns about the global oil supply which flows through that region. So that is something worth keeping an eye out for as well for this week. For the Eurozone, the predominant talks that are currently occurring that are in the news is regarding the Olympics. But if you look behind the recent gaffes from the Olympic Committee, there are concerns and potential terrorist attacks or attempts. So the cutting of fiber optic cables, the issues with the railway tracks in France hours before the Olympic Games were set to start. And that for me is a bit of a concern. If something does occur, it could weigh on the euro. So it's worth keeping an eye out on the news for this week. for potential developments in the Middle East, for any concerns, security concerns in particular, arising within Europe and in particular France. And if you're interested in South America, we're noting the disputed election results in Venezuela, where the prior president, Nicolas Maduro, if I'm not mistaken, claimed the victory over the weekend. 54% of the votes he claims went to him. The opposition is claiming that they have evidence that it was rigged. So that is also a bit of a concern in terms of the geopolitical stability within the region. And that also brings back into play Guyana, who had issues with Venezuela last year over disputes in the Essequibo region, which found massive and massive oil reserves. So that is a bit of a concern. If we see the government attempting to deflect the narrative from the recent election result, I would not be surprised to see tensions flaring up between Venezuela and Guyana in the next week or so, or perhaps this week as well. So we have a lot of issues in terms of geopolitics. We have France, security concerns surrounding the Olympics, the Middle East, Hezbollah and Turkey against Israel. That is also a concern. And then you have South America with Venezuela and Guyana, which is also a concern. So we have geopolitical risks. Then we have the monetary policy decisions from the EC, not from the ECB, from the BOE, BOJ, and the Fed. So a high number of financial releases. We also have the GDP rates for the Eurozone. We have the preliminary HICP rates tomorrow as well. We have JOLTS today, ADP tomorrow. And we also have the US employment data on Friday. So you have a high number of financial releases, which essentially means depending on how they go, so what they release, what they showcase, our technical analysis could be invalidated either on the same day or within hours of us saying that it might move in a sideways, bearish, or bullish outlook. Personally, I would be placing support and resistance levels at large intervals to accommodate for potential fluctuations in price stemming from those financial releases or unexpected risks stemming from geopolitics. And that in particular would be for oil and gold. For the euro against the US dollar, I would be more concerned for the financial releases and the interest rate decisions and the risk for France, although we're not seeing a relative impact from that just yet. For gold, as we've said, it depends on this 4-hour candle. If this suddenly moves higher, so creates a bullish candle and clears above this area here that we mentioned before, we could maintain a bullish outlook, taking aim for R2. We'll be readjusting our support and resistance levels in tomorrow's session. Today, we're simply doing a very nice recap, exploring what we are expecting to see for the rest of the week. And we'll dive more in depth tomorrow, which is a Wednesday, into the BOJ's decision, which is set to occur in tomorrow's Asian session, if I'm not mistaken. And then we have the Fed later on. It'll be very, very interesting to see what happens. And then you have Fed Chair Powell's press conference after that decision. So keeping support and resistance at large intervals, accommodating for any unexpected fluctuations or rapid movements based on the financial releases. So it's a very busy week as we are entering August, the next few days. So with that, thank you very much for watching. I will see you all tomorrow, in which we will analyze the BOJ's interest rate decision, their accompanying statement, and potential remarks by BOJ Governor Rueda. That will be the first part. The second part will be in preparation for the Fed. So we'll look at the Fed funds futures and what they're implying, the potential rate cuts by the Fed, potential scenarios. We'll see the jolts, so we'll have a bit of an idea as to how the dollar may have moved during today's American session. So we'll analyze that as well. We'll also look at the ADP figure, which is expected to come in tomorrow as well. Essentially, we're going to be talking about financial releases. If something unexpectedly happens on geopolitical level, we'll also be discussing that as well. So if you tune in tomorrow, you'll probably catch me discussing about those matters that I've just said. So with that, that does it for today. Thank you for watching, and I'll see you tomorrow.
Thanks for waiting, everyone. Let's go ahead and get started. So, welcome to this week's webinar on the second part of our Fibonacci series, which will be on Fibonacci extensions. So, before we get started, as per usual, a risk warning. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. A disclaimer: the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie. I'm an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here is our agenda for today. We will do a brief recap of the Fibonacci retracement essentials that we went through last week. And then we'll look at ideal market structure. So what are considered significant swings, how you can follow market trends, and then the different Fibonacci retracement levels, followed by this week's Fibonacci extension slides. So then we'll look at Fibonacci confluence and how you can combine what we learned last week, so Fibonacci retracement, with this week's extensions. Okay. Feel free to let me know in the chat throughout the webinar if you guys have any questions. Let me just change the settings so that you can ask me in the chat or Q&A. Okay, should be okay now. Okay, so let's get started. So starting off with a quick history lesson on the origins of Fibonacci. So Fibonacci retracement levels were named after Italian mathematician Leonardo Pisano Bigolo, who was famously known as Leonardo Fibonacci. So, however, he did not create the Fibonacci sequence. Instead, he introduced these numbers to Western Europe after learning about them from Indian merchants. So Fibonacci retracement levels were formulated in ancient India between 450 to 200 BCE, and the sequence is also referred to as nature's numbering system. It's often observed by known people in flower patterns, hurricane patterns, and galaxies. So here's our recap on last week's Fibonacci retracement. So a very simple checklist to follow when you're first starting out with Fib retracements, and I guess some things to look out for. So firstly is the market structure clear. So we want to look for big zigzag patterns, and we'll show you some examples in the coming slides. Next, we're looking for recent trends. So we want to identify, is the trend going up or down? And it's always important to follow the general trend. Next is to identify recent major swing lows or recent major swing highs. Again, we'll show you some examples of those. And we want to connect the two extreme points like you see in this slide here. So we're starting in this example because it is a downtrend. So we're starting from the highest point and then ending at the lowest point for a downtrend. And then if it's an uptrend, we're looking at the lowest to highest points. So here's an example of a clear market structure. Okay, so although Fib retracements and all the different Fibonacci techniques can be used in both choppy and trending markets, it's still important to look for clear market structures regardless of what technique you are using. So here's an example of a clear market structure, and here's an example of an unclear market structure. So one of the ways to identify a clear market structure is actually by adjusting the time frames in order to get a clear market structure for you to conduct your Fibonacci analysis on. Okay, so what may look messy on a M30 chart might actually look very clear on an H4 chart. So if there's too much chaos in the shorter time frames, it doesn't mean that the entire currency pair is not able to be analyzed at that point in time. So it just could simply mean that you need to take a step back or sometimes a step forward to get a clearer view. So in this example, you can see we have a pretty unclear market structure from the 15-minute time frame. So it's quite messy. There's no clear movements in price, and when we change it to the 1 hour time frame, you can see that the highlighted portion has a much clearer market movement. Okay, so there's basically two criteria that you should look out for. Firstly is a clear swing low. So the clearer the swing high, the clearer the trend between these 2 points, and the more accurate your Fibonacci retracement will be. Okay, so I guess now we'll briefly go through what conditions to look out for when we're using the retracement tool and how we can use it on both MT4 and TradingView. So if we have time at the end of this webinar, I will do a brief market analysis. Feel free to let me know if you have any requests in the chat, and we can do a bit of Fibonacci analysis on TradingView as well. But starting off with MT4, okay, so here's just the layout on MT4 if you're unfamiliar. So now let's zoom into our toolbar. So when you hover your mouse over this option, where my mouse is here, it should say draw Fibonacci retracement. So you just click on that, and you can click on wherever you want your Fibonacci retracement to be. So it should come out looking like this. And if you want to add or edit any Fibonacci levels, you simply right click on the Fibonacci trend line, and then so it's pretty faint over here. There is a red dotted line. Yeah, but this is what you will get when you right click on it. So you click on Fibo properties, and then under the Fibo levels tab, you can then click add, and you can proceed to add whichever levels you wish. Okay, so here you can see, yep, it'll look like this. I click add, and then I've added a negative 0.618 level, which is essentially just minus 61.8%. Okay, so now looking at Fibonacci retracement tool on TradingView, okay, we have a typical layout. In this case, we're looking at pound dollar for this example. But basically, you click on the Fibonacci retracement tool, which is the symbol with the 4 horizontal lines over here. So you can find this, I think you can find this on the top bar or the sidebar. Yeah. Here you can see I've circled it out. And then after you've connected your Fibonacci trend line, this floating bar will pop up over here. So when you click on settings, this selection box will appear. So you can select any other levels that you wish. So if you weren't here for a previous Fibonacci session, I'll show you guys in a little bit, but depending on which Fibonacci technique you're using, we will look at different levels. So let's say in this case, I'm looking at all of the relevant levels from negatives to more than 100. And when you're first analyzing the levels, you want to kind of select both negative, mid-range, and above 100 so that we can view all three Fibonacci types at once. So this is what I mean here. From minus 61.8 to 161.8. So the negatives are what we call Fibonacci expansion. Okay. Today we are going through the above 100s, which are the Fibonacci extensions. So we are using the 127.2 and the 161.8. And next week we'll be looking at the expansions, so the negative levels. And last week, the retracements, we looked at the mid-range levels, so 23.6 to 78.6. Okay, so yeah, we'll go through expansions more in depth in the next webinar. So I'll just briefly introduce these levels now. And if you look at the GIF that I've included here, this is the kind of shape that we're looking for. And this is how exactly you should draw your Fibonacci retracements. Okay, another example here, you can see all the different Fib numbers that we mentioned in the previous slide and how it looks drawn out. So basically just take note of the starting point and the ending point of your Fibonacci trend line. So in this case, you can see the general trend that we're looking at is a downtrend. So the starting point is 100%, ending point 0. Okay. In this case, this is also another example, and we can see that price bounced off the highlighted area of 61.8% at the Fibonacci retracement level here. Okay, here's another example. In this example, we're looking at the 38.2% Fibonacci retracement level, and this is in line with the overlap support at the 32544.21. So you can see price bounced off of this highlighted area here. So if you are unfamiliar with what an overlap support is, you can stay tuned for our support and resistance webinars where we go really in depth into overlap and pullback support and resistance. But really briefly, overlap basically means that there are swing highs and swing lows that match up at the same level. Okay, and those tend to be really powerful or really significant levels, especially if they line up with our Fibonacci level like we have over here. Okay, another example here. So here we have two Fibonacci retracements. First one is from the top to the bottom over here. And we have 61.8% that lines up with our 0.92637 level. Okay, and next we have another level, or rather another retracement from the bottom to the top over here. And we have a 61.8% Fibonacci retracement again that lines up with the 0.91614 level. Okay, and for this level, we actually have it matching up with two swing lows. So this makes it a pretty significant level. Okay. Okay, just a really brief example of an expansion. So for an expansion, we are looking for a flash kind of symbol or lightning bolt symbol. So here you see in this example, it kind of looks like a lightning bolt with from the arrows. So starting point is here, ending point is point 2. And here we're looking at the negatives, as I mentioned earlier, for expansion. So expansion, we're looking at minus 27.2 as well as minus 61.8. So in this example, we can see the 61.8% lines up with this swing high here. So we're expecting price to bounce off of the 61.8% level. Okay, and we're projecting it to hit down towards the minus 27.2%. Okay, and you can see this is the outcome of that. So you really have confirmation that price is going to hit downwards once price breaks out of your initial ending point, which is at point 2. So that's how you combine a Fibonacci retracement with your Fibonacci expansion, since they both use the same tool, just that we're looking at different levels. Okay, so you can see here, once price broke below our ending point at point 2, we have confirmation that it's going to hit towards our minus 27.2, which it did, and it bounced up nicely from the minus 27.2% Fib retracement and hits back up to the ending point, which it normally does after bouncing off either the minus 27.2 or the minus 61.8. Okay. So let's get into this week's Fibonacci extension. So here is an example of price reacting off the 161.8% Fibonacci retracement level, resulting in a reversal. So in this case, extensions, we like to look for Nike tick shapes, starting at the starting point will be here, ending point over here. So we are taking, how you draw your trend line is you're basically drawing the head of the tick. Okay, and the projected level is either 127.2 or the 161.8 like we see here. So price has broken out of the 127, so we're projecting it to bounce off of the 161.8, which it did, and results in a reversal over here. Yeah, before we move on, I'll just show you guys the Forex Army page. Let me see. Okay, so in this website, you can see how exactly you can draw a Fibonacci retracement correctly. So, yeah, basically everything that I've gone through today, last week, or future webinars, most of the information will be over here. So you can see the clear structures that we went through earlier, how you can follow price structure, yeah, and this clear steps on how to draw your Fibonacci retracement, some examples. So feel free to check out this website after this webinar. Yeah, it also goes through Fibonacci confluence, which might be a little bit confusing since we are combining all the techniques. Yeah, so you can see over here, we have a bunch of examples. So yeah, let me just pop it into the chat for you guys. Okay, now let's look at when does a Fibonacci retracement become invalid. Okay, here. So one of the most common scenarios of this is when price makes a lower low. So assuming you are drawing a Fibonacci retracement from the top to the bottom, or if there are bars on the right that break your ending point, then it becomes invalid. So I think we have a bunch of examples of this later on. Yeah, so just because it becomes negative doesn't mean that it is invalid, because we've already gone through that Fibonacci expansions are negative levels. Okay, but I'll show you guys some examples later on. Okay, let's combine some Fib retracements. So we have three different methods here. Firstly, we have the minus 27% Fib expansion, and this lines up with a 161.8% Fib extension, and then the 78.6% Fibonacci projection. So what we want to take note of from this example is basically the shape of all of these trend lines. So firstly, the extension, you can see the Nike tick. Over here, it's kind of an inverted Nike tick. So the head is here, the gray arrow, and then the tail would be the long black arrow. Fibonacci projection also uses a lightning bolt shape similar to the expansion, so you can use those together. So Fibonacci expansion, you can see the trend line that we are following from the red arrow, and then for Fibonacci projection, we are looking at the black arrow. Okay, and we can see that price bounced off of the Fibonacci confluence area over here. So that's how you use confluence. Another example, here we have 61.8% Fibonacci retracement, matching up with a 100% Fibonacci projection. So in case you can't see the lightning bolt shape, I've drawn out the arrow. So the yellow arrow here is the Fibonacci projection, and the blue arrow, which is just a one straight line, is your Fibonacci retracement. Okay, and we can see price bouncing off of that confluence area there. Okay, another example here. So here we're using retracement and projection. So the 23.6% Fibonacci retracement is just one line following from this bottom here to the top here. And that is in line with our 61.8% Fibonacci projection. So for projections, it's 3 points. So we have a starting, middle, and ending point. And we can see price testing this level here. Okay. Okay, so let's backtrack a bit and look at how exactly you can use these retracements. So how do you identify clear market structures? Firstly, we want to look for significant swing highs, swing lows, significant trends, or clear market trends. So let's first look at an incorrect example. Here's an example of insignificant swings, which are bad points to use for fib starting and ending points. So you can see it's really messy, the price movements are too small, and there are no significant swing highs or lows. Another example is over here. So there's no clear swings, no clear market structure. Price movement is too small to use any kind of Fibonacci technique here. So here is an example of significant swings. Okay, we have a clear move up and down. We have obvious peaks and troughs, and very clear market movement as well. And here's another example. So I've drawn out the peaks and the troughs to show you exactly how clear it should be. Okay, and following the market structure. So we want to pick market structures with a clear upward or downward movement. So your Fibonacci retracement trend line can follow that movement. And this works better on higher time frames due to there being less noise. So by higher time frames, we mean H1 onwards. So H1, H4, daily, weekly, depending on your trading technique as well. Okay, so you can see this is an example of not following the market structure. So this is how not to draw a fib retracement trend line. You can see we have a zigzag here, okay, but instead we are drawing a fib trend line through the price structure, when instead we should be following it exactly. Okay, so when your retracement is cutting through the market structure, it makes it less effective. Okay. Okay, so for our Fibonacci extension, getting back to this week's topic, again, the tool that we use is Fibonacci retracement, and the percentages are 127.2 and 161.4. And here we're looking for a Nike tick, like you see in the GIF here. Okay, and these tend to be quite powerful setups. If they don't react off of the 127.2, then we're likely expecting it to react off of the 161.8. Okay, and these usually retrace the entire move from point 1 to 2, hence the retracement tends to be more than 100%. So the clearer the movement of the Nike tick, the better. So you can take a look at this GIF over here. So you can see it did test the 127.2 slightly, but it still broke out of it and reacted off of the 161.8 before reversing back down. Okay. Okay, so another example here. So for fib extension, in this example, we are looking at it reacting off the 161.8. And then we see a reversal here. Yeah, I think we saw this earlier, so I'm going to skip that. Here's another example. So this is on the daily time frame. And you can see that there is a swing high that's in line with the 127.2. It's quite small. So these, obviously, the clearer the Nike tick, the better. But if you have a small movement like this, that works as well. So if we zoom in, because this is on a daily time frame, so if we zoom in and view the same chart on a H4, we can get a clearer view. Yeah, so you can see here the Nike tick is a lot clearer. Okay, and this is on the same chart. So we can see how price reversed nicely off the 127.2% fib extension level here. Okay, and here earlier I briefly mentioned an inverse Nike tick. So in this example, you can see it a bit clearer. Starting point here, ending point here, and then the tail would be from the 0% all the way down here. Okay, so as long as it retraces 100% of the tick, then it can be considered a tick. You know, as long as it reverses 100% of the V shape, then it's considered a tick. So we want to take note of the swing low support at 0.91565 in line with the 161.8% level. Okay, so this makes it a strong support level where price bounced off of. Okay, so we'll talk a bit more about combining the different fib methods as well as the support and resistance levels so that it increases the accuracy of your analysis. Okay, let's move on. So we talked about invalid Fibonacci retracements earlier. Okay, and I did mention as well that the fib retracements that are negative are still valid. Okay, and this is an example here. So our starting point is here, ending point here. Price breaks our ending point, as we see from this area over here, um, under the red arrow that I pointed out here. And once it breaks out of it, it's no longer valid. So basically, when it breaks out of your 0.0% level and has made a lower low, that's an example of an invalid retracement. So you want to remember to always pick the lowest point with nothing on the right of the ending point. So your ending point is here. We don't want anything lower than that over here. Okay. Let's quickly get into Fibonacci confluence. We briefly talked about it, but I'm gonna get a bit more in depth into the extensions. Okay, so we looked at this example earlier, but it's basically multiple Fibonacci levels. It doesn't have to be retracement only. As long as there are Fibonacci methods that line up nicely, it's considered confluence area. So you're basically lining up these levels so that you can increase the probability of a bunch of Fibonacci levels working versus a single Fibonacci level working. Okay, so yeah, we looked at this example earlier. So in this example, we have two fit methods. Okay, I mentioned earlier the Fibonacci extension, which we just went through, and the Fibonacci projection, which uses a lightning bolt symbol. So our 61.8% Fibonacci projection, like you see here, lines up with the 127.2% Fibonacci extension. So the Nike tick, if you can't see, the head of the Nike tick is from here, the swing low to the swing high. And because it has surpassed 100% of it, or it's retraced 100% of that, the head of the V shape, then we can use it as our extension. And for our projection, we are looking at the starting point here, middle point here, and ending point at the swing high. Okay, for projections, we use 61.8, 78.6, and the 100%. So here we're looking at 61.8, which lines up nicely with our 127.2% extension level. Okay, and you can see how price bounced off nicely off of that level. Okay. But in this case, you can see it's just the wick of the candlestick that's just touching that area. So we'll go through in a bit how exactly you can maximize your chances of catching this reversal um since it is just a candlestick wick. Okay. Okay. Next, let's look at another example. So here we also have two Fibonacci methods. We're using extension and projection again. Our extension here is not an inverse extension. Okay, so we have the hit, um, the starting point at the swing high, ending point at the swing low, and it retraces is past 100% of the V shape, as you can see here. So that's why we're looking at 127 and 161.8. Fibonacci projection wise, we are looking at the lightning bolt shape again. So starting point here, middle point here, and ending point here. Okay, so 100% Fibonacci projection lines up nicely with our 127.2. In this case, we can see that our 100% also aligned, or rather our 78.6 Fibonacci projection also lined up nicely with the 61.8% Fibonacci retracement. Okay, but it already surpassed that, so it's no longer valid. Okay. Okay. Last example, I think. But basically in this example, we are looking at an expansion and an extension. So for expansions, remember we're looking at the negative levels. So for expansions, we're also looking for a lightning bolt shape. So the lightning bolt shape is like this. The minus 61.8% lines up nicely with our 161.8. So you can see that the minus 27.2 expansion also lines up nicely with the 127.2. So when we identify this confluence, these two confluence levels, we would first wait for price to break out of this confluence area before going in for buy towards this confluence area here. Okay, in this case, obviously it broke out of it, so we were going for that buy. But if we didn't know that it was going to break out of it, we would first going for a buy towards this area here first. Okay. Okay. Okay, this is our last example. So in this example, we have the minus 27.2% expansion, which is the blue arrow. Okay, and that lines up with our 100% Fibonacci projection, which is the lightning bolt shape. Starting point, middle point, and ending point, as indicated with the orange arrows. And then the purple is our Fibonacci extensions, or in this case, we have an inverse Nike tick. Okay, so we have minus 27.2, 100%, and 127.2 lining up. So we can see that price bounced off nicely off of this very strong support level. Okay, so normally you would try to get as many Fibonacci techniques as you can lining up at the same level because that gives us a stronger confluence area. Okay, so it's a more effective indication that price is going to bounce off of that or reversal is going to happen. Okay, so let's talk a bit about trade management. So earlier I showed you guys how sometimes with confluence areas, you can expect a very brief reversal. So a very brief touch on our confluence area before it starts reversing off of it, especially when you have a very strong confluence area with multiple Fibonacci levels lining up on it. So in order to avoid missing your trade, this is the trade management technique that we like to follow. So firstly, your stop loss would be placed beyond. So this means that you would place your stop loss beyond a key Fibonacci confluence area. So the reason for this is because more often than not, price is attracted to such strong areas of confluence, and if your stop loss is right before instead of beyond it, you will most likely get stopped out before the market reverses. So that's basically what I mentioned earlier. In this example here, um, in this example, we're going in for a buy. Okay, so our stop loss will be placed below your Fibonacci confluence. And your take profit, we recommend you to place it before. So in this case of a buy entry, we would place our take profit below the confluence area. Okay, obviously these will be switched if you are looking at a sell entry. But yeah, basically the standard rule is that stop loss will be placed beyond a key Fibonacci confluence area and a take profit will be placed before it. So before means that you should place your take profit, in this case, below the confluence area. Reason for this is because when price reaches the confluence area, there's a high chance that it will not be able to go beyond it. And instead of reaching your profit target, it might reverse back to your entry or even worse, your stop loss right before it reaches your take profit. Okay, so that's also one of the reasons why people complain that the market is being manipulated because they miss their take profit by 1 or 2 pips. Okay. Okay, let me know if you guys have any questions. We still have a bit of time. So I'm gonna pull out my charts, and if you guys have any requests for any currency pairs you'd like me to go through, feel free to pop them into the chat. Okay, I got a request for okay, DOW30. Let's go ahead and look at that. Mm, can you just really quickly drop the ticker in the chat? I can't seem to find it on TradingView. Is it this one? Is it this? Okay, let's go ahead and analyze this first. Can you guys still hear me? Okay, let's continue. So, let's start off by looking at it on the higher time frames. Okay, so okay, we can see a general downtrend on our daily time frame. Let's look at our weekly time frame. Okay, weekly time frame is pretty bearish as well. Okay, okay, I'm just gonna go in and add some support and resistance levels. So here's our first resistance. Here's our first support. And here's our second resistance. Okay. Okay, let's look at our 4-hour time frame. So we kind of have the same levels here. This is our first support. Yeah, okay. Okay, let's look at Dow Jones. Okay, so same thing, we're gonna look at the higher time frames first. So it's pretty bullish, okay, on our weekly time frame, on our daily time frame as well. Okay, here is our first resistance. Okay, this is our first support, and I think this would be our second support. Okay. So if we're looking at our retracement, we're looking at the mid-range first. So we have these 5 levels, 23.6 to 78.6. And I can see that my 38.2 lines up nicely with my first support. Okay. Let's see. Okay, let's look at this on our 4-hour time frame instead. Okay, it's pretty similar. Okay, now I'm gonna look at a projection. So for projection, we use these 3 levels. Okay, and okay, actually here I can show you guys an example of a Nike tick. Okay, we're looking at the above 100 levels. Okay, so 127.2 and 161.8. And you can see the shape of the Nike tick here, right? So it's surpassed 100% of the V shape, which is why we can use it. And you can see price actually rebounded off of the 161.8 level, just as we suspected or would expect. Okay. So yeah, that's an example of the Nike tick or Fibonacci extension that we went through today. Okay, let's see. So because of that reversal of the 161.8, we can expect it to continue to go down towards this level now, um, which is our 23.6 level. Okay, so I might just put an indicator there. Let's see if we have previous levels. Okay, kind of have this level here as well. This would be just an intermediate level, okay, that I'm expecting price to hit towards. Okay, now let's look at some indicators. So I like to start off with Ichimoku and MACD. So if price is moving below the Ichimoku cloud, it is a bearish signal. And if it's moving above, then it's a bullish signal. So in this case, we see price moving above, so it doesn't support um our analysis that price is going to drop down to this level here. Okay, so I'm going to get rid of that. And MACD, you can see that it does support my analysis. So I can keep that. And let's look at RSI and stochastic. RSI, you can see very obvious downtrend. So it also supports my analysis. Let's look at stochastic. Okay, stochastic as well. Okay, let's look at maybe Bollinger Bands. Okay, so you can see that on our Bollinger Band, price is moving out or it's breaking out of the bottom band of our Bollinger Band. So it's also supporting our bearish analysis. Okay, so out of the five, 1, 2, 3, 4, 5 indicators that we've used, 4 out of 5 of them have given us a bearish signal, which supports our analysis. Okay, so because there are so many indicators, 50% of them will give you bullish and 50 will give you bearish. So it's important to just um learn a couple that you're comfortable using, that you know how to use, and then stick with those. Use those interchangeably to support your analysis. And yeah, okay. Any other requests? I think we have time for maybe one more. Okay, no worries. Mm, okay, let's look at gold. So on our weekly time frame, it's pretty bullish, right? On our daily time frame, also pretty bullish. Um, okay, there's not a trend line, but let's see if we have a trend channel. Okay, I think we can see price breaking out of the trend channel. Okay, we might see it break out a bit. Okay, let's go in really quickly with some levels. So this is our first resistance, our first support, and our second support. Okay, on our 4-hour time frame, Okay, I'll just show you guys an example of a Nike tick again. Here, okay, you can kind of see this Nike shape or tick shape. Okay, and you can see it bouncing off of the 161.8. Okay, yeah. And okay, so this would be my first resistance. Um, this is my first support, and then my second support here. Okay, so going in with a projection again, it's in line with my 61.8. Mm, okay, my 38.2 lines up with my first resistance. Okay, and okay, I think that's about it. Okay, so my 23.6 also lines up with my first resistance, and so does my 61.8. Okay, so we have this confluence area here. And this is also a pretty significant level of overlap, okay, because we have a bunch of swing lows lining up as well. Okay, now let's pull out some indicators. Okay, price is moving below the Ichimoku cloud, so it's giving us a bearish signal. MACD is also giving us a bearish signal. If we look at RSI, okay, RSI isn't telling us much. Let's look at stochastic. Oh, okay, so we have a bit of divergence here. So price has made a higher high on our price chart, whereas on our stochastic, it's making a lower low. So this is a bearish divergence and could suggest that price is going to continue to break below our first support. Yeah, but we'll have to see because this is a pretty significant level here. So you might see a bit of a jump. Okay, if I zoom in, you can see price already increasing here. But ultimately, because of all the downward pressure, we might see it continue to drop below the first support. Okay, maybe let's look at moving averages as well. Okay, so the SMA and EMA price is moving below both of these indicators and it recently crossed over each other, which could suggest a change in trend. And it's been pretty uptrend recently, and now we're seeing a downtrend. So that could be because of that. So also supports our bearish um, analysis. Okay. Okay, I think that's all the time that we have for today. Um, Let me see if we have any other questions. Okay. Okay, if there's nothing else, thank you guys so much for joining me today. I hope you guys found it helpful. Have a great rest of your week, and I'll see you guys next week. Bye, everyone. Thanks, everyone. Bye.